Welcome back to my channel, fellow investors. In this video, I'm going to be covering Alphabet. Alphabet owns Google, Google Search, YouTube, Waymo for ride sharing. They have Google Cloud Platform, which is a big hyperscaler. And now they have Gemini AI, one of the biggest platforms for artificial intelligence. Alphabet is a really successful company, very intelligent company that started in the search business, perfected it, made it the number one search engine in the world, and that's become a marketing cash flow generating machine for them. They also acquired YouTube, which is now becoming another cash cow for the company. Both businesses continue to grow and continue to generate a lot of cash. That gives the company the resources to start new businesses like Google Cloud Platform and now Gemini AI. The AI business, we'll see how big it gets, but certainly Alphabet's going to be a big player in the AI race. The two big players will be Microsoft and Alphabet, and potentially other big players coming into the picture, like XAI with Elon Musk coming into the picture. IBM's been there with Watson. Meta has Llama. I mean, there's some big organizations that are going to want a piece of the AI ecosystem. We'll see how things play out. In this video, I'm going to be looking at the value of Alphabet and seeing what the current stock price is to determine if it's a good idea to buy shares in Alphabet at this time or if I should wait until the stock drops. The stock has been dropping recently. It hasn't been having a great 2024. Most stocks are really up, especially AI stocks, but Alphabet's been left behind. Is that an opportunity? Potentially. Or it might be a signal that there's trouble with Alphabet. Let's take a close look. Looking at the fundamentals for Alphabet, starting with their market cap, they're a $1.74 trillion company. This is a very big market cap. They are one of the Magnificent Seven stocks. They have revenues above $300 billion, which is incredible, net income above $73 billion, and they generate more than $100 billion of cash flow from operations. That's why they're worth so much, is that cash flow generation and the growth. The company has a PE of 20.55 if you look at forward PE, which is low. The S&P is really at 25, 26, and the S&P has many companies. I would say only a few companies are better than Alphabet. So I think that's an opportunity if you look at the forward PE in Alphabet. Most analysts are putting a buy rating on Alphabet, and a lot of analysts cover this stock. One thing that's interesting is Alphabet has had a couple of mix-ups with their AI launches, and you can see their stock price has really suffered in 2024. It's really come down as of late, which provided a nice buying opportunity for people that wanted to buy shares. We'll see where it goes. I guess at this point, it's been trading sideways for about 5 months. But overall, for the past year, it's up 54%, which is a good winner. I'm going to value Alphabet by looking at their free cash flows in the future, a projection of how much free cash flow they're going to generate over the years, discounting those free cash flows to get to a net present value, and then comparing that to the overall market cap. I'm also going to look at earnings per share and get a stock value per share based on their earnings per share and comparing it to the current share price. Let me start with looking at their free cash flows. To begin with, I took 2023 numbers and I grew those numbers by 6% in the first 4 years, which is a reasonable growth rate. The company's been growing at 9%. Their free cash has only been growing at 2%. And I think it's because there's been heavy investment into AI as well as the hyperscaler business. I think both of those, the amount of investment will go down and the free cash should go up. And then long-term growth, I'm going to put it at 4%. Having said that, for year one, I have free cash flows of 82 billion, 87 billion in year two, all the way up to year four at almost 98 billion. And then terminal value, all free cash flows beyond year four are in this bucket. I'm going to discount those free cash flows by 8%. Alphabet has a great balance sheet. I could have easily gone to 7 or 7.5, but I'll go with 8%. And I get a net present value of all those free cash flows of $2 trillion. I'm going to add the cash, take away debt. You can see they almost have 110 billion of cash and just 13 billion of debt. So the equity value for Alphabet is $2.1 trillion, but the market cap's 1.7 trillion. So it offers a 19% discount if you compare the net present value of other cash flows that I expect in the future out of this company compared to the market cap. If you look at earnings per share are expected to be about $7 per share. I'm going to give them a PE of 30, which is reasonable considering that the S&P has a PE of 25, 26, and this is Alphabet, one of the premium companies. So I'll go with 30, and I'll grow earnings by 6%. Using those factors, I get a per share value of $171 per share, but their shares are trading at $144. So there's a 19% discount using the earnings per share method. Now, I don't think that's ever happened before, but the actual discounts match, and my blended is exactly 19% for Alphabet. Overall, this is a great company, high quality company, and it's reasonably priced. Worst case scenario and best case scenario, there's a nice discount available for me in Alphabet. So should I buy more shares of Alphabet, hold the shares that I own, or sell the shares that I own in Alphabet? Well, I look at three things in a company. First, the company, do I want to be a part owner? Second, the balance sheet, is it in good health? And third, is the stock price, is it being discounted? Or is a fair price being sold to me given the company? To begin with, the business is great. I'd love to be a part owner of Alphabet. I think their industry is excellent. I showed how much free cash flow they generate. Just it's a really desirable business to own, and their management team's excellent. The balance sheet's in great health. They have far more cash than they do debt. They're really net debt zero and well below debt being less than 3 times EBITDA. And they offer a nice discount on the stock of 19% on a superb quality company. So I'll be buying more shares of Alphabet. I've been buying in this dip. I've been buying every day that Alphabet shares have been down. I've been buying shares, continuing to build this position. Right now, it's either the second or the third biggest position in my portfolio overall. Thank you for watching the video. I hope you found it interesting. I'd love to hear your comments on Alphabet. Please leave a comment on the video. Please like and subscribe to my channel if you would as well. Thanks again for watching.